Hello, good morning, everyone. Welcome back to my channel. Today, I am going to go through another episode of Market Update. And in this episode, I am going to show you what you need to know about the current market for September 2022, as well as whether the price hits the rock bottom or not. All right. Thank you so much, everyone. My name is Longley. Welcome back to my channel. I am also a real estate investor in Chandler, Arizona. In this video, as I mentioned earlier, I'm going to talk about the current state of the market right now through the lens of the entire month of September 2022. And I'm going to touch a little bit about the pricing on showing you some of the data to show whether it already hit the rock bottom or not. So if you are curious about what the market is heading, stick around and stay tuned to the information that I'm going to provide to you right now. All right. So let me share with you some screen right here is the market update. Let's look at the first number right here. In terms of the monthly sale number, you will have about 6,328 sales. This is the number of houses that sold in the entire month of September 2022. This is actually good news, up about 3.1% if you compare month over month compared to the August 2022. However, though, as you see here, when you compare with the Great Line, which is the 2021, right, you're going to see the difference of 29.2%. The number of new inventory is only about 8,690. Now, this is the good news. Now, why do I say that? This means that not a lot of, for the market in overall, not a lot of people going to rush selling their house. Not a lot of people going to do so. And this is obviously the drop from June, July, and August and September, right? This is the 9.7 drop compared to August 2022. It also less than the same month of the previous year, of about 8.1% difference, 8.1% less. Okay, so when not a lot of homeowners selling off their house onto the market, right, meaning that not a lot of supply get onto the market, and therefore the price will not be reduced. Okay, we're gonna talk more about the price later on, but I'm just gonna give you a quick keynote of this wrap right here. The next one we're going to talk about is the total inventory. All right, 22,617 total inventory. This is all the available houses on the market right now available for sale, right? This is an increase of only 3.6% when you compare to the previous months, okay? When you compare to August. So in contradictory with the period of April, May, and June, this is the big increase of total inventory. Now, going to July, August, and September, we only have a slight increase of the total inventory. Now, it's 2 points. One, the demand is still slow, obviously, because otherwise you're going to see the big drop in total inventory, right? Number two, the rate of change of total inventory has been reduced a lot, and it's already at about the same level, 3.8, 3.5, 3.6 for the last 3 months. So we can see that the market has been a little bit stabilized for the last 3 months. Okay. Now, when you compare to the previous year, it's 93.3% difference. Okay. This is mainly because previous year there's a lot of demand on the market. Okay. So even though the new inventory is higher last year, right, is higher last year, the total inventory of this year is actually higher because last year there's a lot of demand buying a house quickly. So obviously we can see that two things going on right now. The demand has been slowing down a lot. Demand meaning that the number of buyers buying the houses on the market has been slowing down a lot. Okay, and then the second trend, you can see that the seller is also slowing down in terms of giving up on their property as well. Right. The next number that we're going to talk about the monthly supply of inventory. This is the months needed to sell the entire inventory on the market right now is 3.57. So it is about 4 months to be able to sell off the entire market if assuming we don't have any new inventory onto the market. Now, this is another trend that you can see. July, August, and September is about the flat line. So obviously you see that the rate of onload new inventory and offload new inventory is about the same, right? Therefore, the monthly supply of inventory is about the same. I'm sorry, should be in August. The number in August is 3.56. All right, so it's not much different. As you can see now, obviously you can see that the market has been stabilized. Okay, so that's a key word in this video presentation right here. The average days on market is 48 days on market right now for the home to be sold. Now, this is 18 days different compared to the last year, September of last year. But when you compare to the previous months, it's only changed about 6 days. So one more week, you have to be a little bit more patient to be able to sell your house on the market right now, seller. All right, so those are the I guess there's a more boring number, right? This number right here, I think is more interested to a lot of people because we're talking about new list prices on median, the median new list prices, the median sale prices, and the sale price forecast. Okay, the new list price is about $459,000. Okay, so that is an increase, actually an increase of year over year of 12.6%. Okay, I'm sorry. For the median, it is 8%. 8% increase. Okay, I was talking about the average, but I think I would prefer talking about the median sale price. Okay, the new median list price is increased about 8%. So the seller is still comfortable with the current market right now, even though it is slow. Right, so it's still a little bit higher than the price of the last year because they don't need to. They don't need to pull down the price crazily in this market yet. Okay, for the sale price, the median sale price is 439, right? So this is when you compare to the previous month, all right? So that is a little bit decrease. It is a little bit decrease at 439. However, though, when you compare to the previous year, September of 2021, we still see about 7.1% increase compared to September 2021. And the forecast, now as you see here, the forecast, because of the current market condition, we cannot forecast that the median sale price is going to go higher. In fact, it's going to go $1,000 less. Now, expecting that this number is going to be a little bit even lower than this because you know, this is all the forecast, right? And then we know the current market right now is very slow, so we know that it's going to be a little bit lower than this, but not going to be like 200 or 300 down, right? This is maybe 435, 436, somewhere around that number right here. Okay, so those are some forecasts of the number. Now let's come back to the question whether the price hits the bottom block or not. Now, before I go to that question, to answer that question, right, you know, obviously we all heard about the crazily high interest rate going crazily since May of this year, right? Which changed the whole thing of the real estate market, right? From January to May, everyone is very happy. The buyers, even though it's a little bit more difficult for them to get the house at that time, their monthly payment is very low. The seller can hire above the asking price, so everybody is happy at that time, right? Back to May, the first increase in interest rate, right? Which is crazily high interest rate going up. And now from now, you can see that September and October 18, it is about 7.37 right now already. 7.37 right now already. So the interest rate has been going very high for the last couple months, and therefore it changed the dynamic of the real estate market as of right now. As you see here, the demand slowing down a lot, and not a lot of people buying houses on the today market right now. But as for the price, let's look at one chart right here. Okay, so we can see that. I'm sorry. We can see that since a lot of, not only just the demand on the market slowed down, but also the motivation of the seller on the market also slowed down. You know why? Because because other sellers used to be able to sell the house very quickly, right? Now, the current seller, they cannot, and they cannot get the price that they want neither, right? So they don't have a lot of motivation. Also, why do they have to keep up their current low interest rate mortgage for a lower price of their house, right? So they do not have a lot of motivation to sell off their property. Some of you might ask me, then what do they do with the property, right? It depends on the situation, right? If they don't have the second house, if they don't have the third house to move into, if they don't have a new house to move into, they may just stay in put. They may just stay at the same place. Or if they already have a new place, they may convert that to a rental property, a short-term rental property, which could give them a profit right now already for a very small monthly payment. All right. So that's the key thing right now. So not only the buyer is down motivated, it is demotivated. Is that the word? If not only the buyer is demotivated, but also the seller is demotivated to sell in this market as well. And therefore, there's not a lot of inventory on the market as you see in previous slide. Right? So here we have a situation, right? Demand and supply. The interest rate, his back thing a little bit. The interest rate is normally not a direct input for price, right? The interest rate as interest rate goes higher, the demand goes lower. And now if the supply level keep the same, increasing, as the demand goes lower, the price go lower because the demand and supply in the opposite direction. In this situation though, as the demand go lower, the supply also go follow it. So there's not a lot of houses for the remaining demand as well. So why the price doesn't have to change much. And as you see in this chart right here, right now in October, we have the change, the annual change. Now don't look at the 1 or 2 week price reduction of a lot of seller, right? Those are the seller that put their house on the market at a very crazily high price, high asking price. Therefore, now they have to reduce the price. Now, when we compare between this year versus last year, it's about 6%. It's about 6%. It's not the negative, right? So if you buy the house last year in September 2021, you still earn about 6%. It's not a 30% of March, or it's not a 25% of May anymore. I agree that, but it's still 6% compared to the previous year of September 2021. Now, the other thing that you have to be mentioned is that the notice is that for 2021 and 2020 are the crazy year. Don't you agree with that? Because at that time we have COVID, we have super low interest rate. So if we get rid of the 2020 and 2021 out of the picture, right? Remove those out of the picture completely, we can see that 2014, 15, 16, 17, 18, right? They about 10%, 7%, 6%, 8%. They are around below 10%, right? So if we remove 2020 and 2021 out of the picture, you now back to the level of pre-COVID. 6% of the annual change. 6% of the annual change of the pre-COVID number. All right. Now, if you are not convinced of that, let's look at the price number for quarterly, right? So again, this is 2019, 2020, and 2021, and then 2022. As you see here, we have a very nice increase from 2019 to 2022. So you see the big change here, right? You see the big change here, right? So if we now come back to the level of annual change of 2019, which is about 6%, right? A lot of people hoping this 445,000 is dropping back to 2019. But if you have a positive 6% change year over year, then this number is gonna continue going higher every quarter, right? Going higher than 400 for sure, right? Every quarter. We have a big drop from the quarter number 2 to the quarter number 3 of 2022 because of the interest rate. But as you see here, going to quarter 4, this line is no longer as steep as the 2 to 3. So the price has been stabilized. As you see in the previous other charts that we see, the market has been stabilized at this level. At this level, when I say this level, it means the interest rate is about 7%, right? The same level of demand still on the market right now, and the same level of supply on the market. markets. So this market has been slowly stabilized at the same level, and we can see that this could be the start of going upward a little bit, okay, going upward in terms of pricing going to the new year. Because here's the thing, with the December, November coming up, right, the demand gonna be even slower, even slower than October or September, because that is slow season of Arizona, right? So I'm expecting if the interest rate is going to be the same to the spring, okay, which is the high season of Arizona market. If it is continue the same level at 7%, it is nothing happening onto the market right now. This could be the bottom of the pricing going downtrend. This could be the downtrend bottom line around November or December is the bottom of the pricing going down, and it's going to start going better when we go to the spring, when we have more demand on the market right now, because normally spring is a good time for the people to start shopping for houses so that they have a new house for their family before the new school year start again in August. So for the buyers, if you want a good deal and you think about buying a house next year, why don't you shop now to still take advantage of the slow market? The price, of course, still going down, as I told you, through November and December, right? But you don't have a lot of competition, and you still be able to negotiate with the seller in this market. Going to the spring, right? Going to the spring when there is more demand back to the market, because that is the high season of the market, right? You probably have a higher competition at that time, and therefore the chance that you win the negotiate is less than now. Okay, so those are my answer for whether it is hitting the bottom rock or not, and some of the advice for you for the seller and the buyer in this market. Thank you so much, everyone, and hope to see you in next video.